In this video, we are going to show you how to get the most out of your business plan by making sure that you are filling out the questionnaire the best you possibly can. Now, before we get started, I think it's important for you to understand the way that this tool works and the way this tool is designed. So, this tool is built and trained off of real consulting firm data. So, our consulting firm has been around for 12 years and has done thousands of business plans for companies that have gone on to raise a significant amount of funding. And we have trained this model to be able to write like our consulting firm and produce at the same quality. So it's not what you're getting from ChatGPT, it's not what you're getting from any other LM or any other tool. It's writing at the same enterprise quality of our consulting firm, and that also means the same level of research. So we made an acquisition of a company called Impact Analytics, and it is a market research company that we used to collect a tremendous amount of information that we're using for our reports. So the information that you're getting is reliable and as accurate as possible. And I'm happy to go through an explanation of that when we get into this. And also, it's important to understand that the way this tool works at this time is it generates a Excel financial model in a Google Docs or a Word doc for the business plan. Now, the reason we do that is to allow it to be in a format that you are familiar with and has maximum flexibility. Because if you are sharing your plan or your model with a third party, with an accountant or a banker or anyone on your team you're collaborating with, they may not want to take the time to learn a new tool. They are probably familiar with Google Docs or familiar with Excel, and they want to work in a format they're familiar with. I know I always get frustrated when I'm looking at these tools and they're trying to change the way that I work. And we are going to increasingly add more in-app functionality, but we also want to do it in a format that you're familiar with, because if you got an enterprise grade product from a consulting firm, they would deliver it in the same format, and we want to get as close as possible that we can to that deliverable. So to get started, I've already filled out the initial prompt, which is the tell me about your company, on the prior page. And I want to say that page is actually really important because when you're producing that, that is the foundation of all of the information that's going to be used to generate the information from AI. So we want to make sure that it is as detailed as possible. And some tips when you're doing this is potentially, if you have that information on your website, copy and paste it in. If you have that information in a prior document, then upload it to ChatGPT and ask it to create a summary of it and paste it in. Or if you have it all written out in multi pages, just paste it in. The document will summarize it. Do not worry about being too long. The longer, the better. The more details, the better. Because when it comes to creating something unique and customized to you, it's better to be able to be very, very, very nuanced. Because when it comes to your competitive positioning, it comes to your competitive advantage, it all gets down to the nuanced details. So let's get into this. The custom success factors we're going to just generate from AI, because I'm going to make this as smooth as possible. And even if you want to use your own uh, text, I found it's helpful to just generate it from AI anyway, because it can produce some things that you might not have considered. So I'm just going to continue to use this because when I created it the first time, I provided it enough detail so that it had pretty good information about what we do. And I'm going to generate the products and services as well. And it's going to generate a lot of different ones. And the way that it generates this in the it generates this data is because we are using a large language model, it is specially designed to write like our firm, but it also has a tremendous amount of knowledge from the data that it's been trained on beyond what our firm has. So it has a pretty good idea about what's charged per region. So if you're in the United States and you have a software company, then it recommends some prices based off of what the market sentiment is, the average sentiment. And what I'm going to do is remove some of these because they are not really super relevant. And this is actually not exactly for ProAI. What I would do is go ahead and put in what it would be for me. But for now, let's just leave it as this is. And as I mentioned before, if you wanted to change it before, then you could just go ahead and do that. The direct competitors we're also going to generate from AI, because I would encourage you to put them all in. And these are uh, some competitors, I think, that are more broadly defined. And if we wanted to specifically put in some other competitors, just swap in the name. And what the system will do is it will go through and it will um, take what information is known about them, and it will write up a brief about them and try to highlight where its market positioning is relative to your business. And this is something that, if you look at our other report, our competitor benchmark report, or you're interested in the industry report, which I would highly recommend because it provides a tremendous amount of industry knowledge about your business, tremendous detail, competitor analysis to really understand what are the key trends in your industry, what's the growth rate, what is your competitive positioning, and how do you fit within that. So that's something that I would suggest there, but definitely putting in competition. So adding in the management team members, whatever you put in here, I would recommend that you create as much information as possible. So putting in the name, let's just say an example, and we're just put in as much information as you can. In this particular example, I didn't put in a tremendous amount of information, but what you can do is just head over to ChatGPT and just ask it to expand. Because even if we don't have enough information, then we still want to kind of beef it up a little bit just so that the tool has a little bit more information to work with. And something else that I would suggest is that you go ahead and if you have a LinkedIn bio, copy and paste the information. If you have a resume, copy and paste the text of your resume into here, because the more information that this tool has, the better. You have to think of this as if you are providing this information to a consultant or you're providing this information to an analyst, they need to have this information in order to create a custom tailored plan for you. So if they don't have that, then it's going to be generic. So you want to do that up front, and you want to spend the time to do it up front, so you have to spend less time editing it, because to edit it is going to be more time consuming and you're going to have to add that information in later anyway. So now the question is, how are these financial assumptions determined? Well, that's a great question. We have our own code in the back end that will generate these using research about companies of a similar size in a similar region in a similar stage. And it generates an outline and a set of assumptions for you. Now, you by no means have to use these assumptions. What they're really designed to do is say, hey, look, this is what the average would be for a company that's starting out, or this is what the average would be for a company at your stage in your region. So if you're starting a hotel in New York City, then it's probably going to show you different prices at a hotel in Bali, Indonesia. So it's really considering those things. Now, these are on the monthly basis and then the growth rate and the category. So this, I think, is and actually a pretty fair set of assumptions. Now, if I want to change them, I can go ahead and change them. The initial capital is what is going into the business, and it's actually the sum of the working capital and capital expenditures. And the working capital is just kind of my operating expenses. So if I'm raising, in this case, $200,000 in this example, to cover all of my day-to-day operating expenses for the foreseeable future, then that's what this is for. And capital expenditures is long-term assets. So if I'm running a hotel, this would be things that I'm purchasing that are going to have a long life cycle. So if I'm purchasing real estate, I'm purchasing cars, I'm purchasing heavy machinery, that's what this is designed to do. And you don't have to have anything in here. And if you don't have anything, I would just put a zero. But it's designed to just create a structure for you. And the reason why they're categorized into different categories is because the working capital in the financials is going to go on the balance sheet to cover expenses that you have in case the business is generating more expenses than more revenue. In a scenario like that, it's going to take from that working capital. Or you have some expenses before starting the business if it's a startup that needs to be drawn upon. And the capital expenditure, on the other hand, is money that is going to go and purchase assets on your balance sheet. So it's going to go a different area of the financial model that's going to go into purchasing long-term assets on the balance sheet, and that cash will not be there anymore. So that's why they're in different categories. It's important to understand that. And the operating expenses are monthly. You can change those however you would like. And if you're unsure of what to put there, you can look at the tool, the AI advisor tool in your dashboard, and you can ask how you can refine that and what your expenses may be. But this is really important because the financial forecasts of our tool are based off of your operating expenses. So we use the operating expenses to forecast the revenue. So if your operating expenses are $1 million a year, then we may forecast $1.2 million in revenue to get you a 20% profit margin that is aligned with your industry average. Because the reason it's done that way is a lot of businesses, especially if you're going for a bank loan or you're going after investment, they tend to fall within a range of their profitability. So a company that is in the software industry may have really high profit margins of 20% or more, whereas a company that's in manufacturing may have really thin profit margins of 5% or 6%. And it's all based off their expenses. So if we have a business that is in a really operating expense intensive industry such as manufacturing, then and we have a certain amount of people we're hiring, a certain amount of utility costs and equipment costs, we can forecast the revenue based off those operating expenses, and you probably have a better handle on what your operating expenses are rather than forecasting your revenue. So in order to make a forecast that is aligned with your industry, and that's really important if you're going after funding, is to show that you're intended to be within the industry average. And to show a massive anomaly outside of that, either being overly optimistic about your profit margins, is going to imply that you either have some special advantage in your operating structure that is a exception, which could be the case, or more often than not, there's some expenses that you're not showing or you haven't accounted for that are going to be a concern or are going to put you in a difficult position in the future for not accounting for. So on the other hand, we don't want to be overly pessimistic about our forecast because that could be discouraging to people if you're sending this to a partner or an investor or a banker. On your own, in your own scenario, in your own case, perhaps you might want to run a different scenario where the revenue is different, and for that you can use the editor tool. The financial editor tool can do that for you. But for now, we have this template, we have this structure with the operating expenses, and now I'm just going to leave it the way that it is, but you can change whatever you would like, and I would recommend that you change it up front so you can minimize the cleanup work, because a lot of this stuff has codependencies. So if you change one thing, it will change multiple things. It's really important that we get it right as close as we can the first time. Now, so what this has done is, as I mentioned, it's generated the financial assumptions. And one thing to note about the revenue line items and the expense line items, and this is a really important point, in order to make this as clean and as simple as possible, no matter how many revenue items you have in this, we've classified them and grouped them into 4 categories. So in a very simple example, let's say that we left those 4 categories with the 14 categories for revenue items that it generated in this SaaS example for ProAI. It may group in software sales, training and support, products and services, and um, uh, other expenses, or sorry, other revenue items like affiliate revenue or advertising revenue if we had an advertising model. And it would group those in together and take the average of them to generate it. The reason it does that is because it creates a cleaner financial set of financial projections, so that instead of having all these little individual units, you have these categories of units that make it easier to forecast and paradoxically more accurate. Because um, if you think about it from the perspective of doing a projection for, especially for an external party, um, they don't want to see every single SKU. And if they do, you can do it in the model. That's okay. It's not prohibitive. But if you look at a lot of profit and loss statements, a lot of them tend to veer on the side of being more concise and grouping expenses and grouping revenue items together. And the expenses do the same thing. They group all the expenses into 6 categories. Again, in the model, if you watch the model video, if you're an advanced user, you can add those expenses into the model pretty easily, or you can change them even on a monthly basis if you want to, or you can create a more intricate set of assumptions. But for the purpose of this, is designed to make it as simple and clean and organized as possible. And then what you do is you just generate the plan and you download it, and you can continue editing it using the editor tools or the Google Doc, and sharing it with people, or the financial sheet, and sharing it with people either in the editor or in the financial model. And of course, if you have questions at any time, our support is available, and you can reach us on the phone as well.